All right, what's going on, Tycoon? Super excited for today's video. We're going to be looking at Shopify and Spotify. Okay, so Shop and Spot. All right. Now these are two that I think you could go shopping for right now if you are looking to purchase some shares for some long-term investments. Okay, now this isn't financial advice. Remember, this is just I'm just you guys' friend trying to help you guys out, put you on some game. Okay. So there's a lots of FUD and fear right now. Okay, everything is going down. Everybody's panicking. This is the time when people buy. Okay, rich people buy, wealthy people buy. All right. Now, I do think that everyone needs to be prepared for a continued market pullback in February. But basically, right now, Shopify is in our weekly demand zone. Okay, so we're looking at the weekly chart. And this green box right here is our demand zone. Okay, from basically from 1,200 to 1,000. We need to find some support, and we could just trade sideways in this area until we find demand and recover and go back up higher. Okay. Now, in case we do break demand, I have two support levels drawn up for you guys. We have one at 940 and then another at 828. Okay. So those are going to be our two support levels that we need to maintain in the future to recover. Okay. If we fall, right? So let's say we fall out of our demand zone. We have a major support at 1050 basically, at 1047 to be exact. But that's right above the bottom of our demand zone at 1,000, and below there 940.82 is going to be our next major support level. Okay. But it definitely does look juicy. For instance, let me show you guys some debit spreads you can do on Shop. Okay, and these are some long call debit spreads. But I just want to give you guys an idea of the kind of profits that you can make in this type of market. Okay, so let's go all the way out to January of next year. Okay, and let's see. Let's go with the 1,700 calls. Okay. So we're going to do a debit spread. So to do that in Thinkorswim, you would basically hit buy and then vertical, right? And what you want to do is we'll change this to 1, and you click here, confirm and send. And this would cost you $236, right? And your max profit would be 1,765. Okay, now I have a debit spread tutorial in the top right hand corner of this video. If you're a little confused by what I just did there, that's what's known as a vertical debit spread. Okay, I like to trade options a lot. And basically, what that is betting is that, within a year's time from now, we would come back up and hit the 1,700 mark. Okay. Now, for you to be at your max profit, it would have to be above 1,720 at expiration. So January 2023. But essentially, what this does is this gives you a 1 year time period. Okay, because it's January right now, 2022, where if Shopify returns to its all-time highs of 1750, okay, you're going to be in a nice profit. Okay, now you won't be at this max profit unless it's at the expiration date of January 20th, 2023, right? But if it happens before that time or within the next year, this play in particular will be up significantly rather than just owning shares. Okay. So that's one play. And that's shop right there. Now spot. Okay. Spot, I have a different type of play. Okay. I have a bearish play for you guys. All right. We have a very, very clear head and shoulders. Okay. Now, if you don't know about the head and shoulders, of course, I have a head and shoulders video in the top right hand corner of this video. That'll help you guys out if you don't know that. Okay. But basically, here's our head, here's our two shoulders, and we are breaking the neckline right now. Okay. So it's going to be interesting to see if we hold that. If we look on the daily chart, what just happened today, we just filled a daily gap down we needed to fill. Okay. So if you guys watch my videos or this is your first time watching one of my videos, I love charting up daily gaps for you guys. And basically that's what this blue box is. All right. Now what that is when this candlestick gaps up and there's a space in between them. Okay. I like to chart those up because 90 to 95% of the time, historically, those gaps fill. It's just a matter of when. Okay. So this gap was created in August 2020, right? Or 2021. And then it filled today on January 2022. All right. So we had a 4-month difference time span right there for that gap to fill. And then we have the head and shoulders pattern. So, I mean, in February, things are supposed to be bad. Okay. Now that's just my opinion, but also that opinion is coming off the fact that, normally historically we do pretty bad in the month of February. It's not necessarily the greenest market. Okay. So if we look, I want to show you guys some puts, okay, that you can look at. If we look at Spotify, okay, and go to spot, and we go to February, if we let's look at all the contracts real quick. Okay, so February puts options, the open interest, we have 80, 28, 63. Open interest just means how many contracts there are being held currently. Okay, so not very many there, right? Not even 100. All right, and let's go to February 11th. Okay, and it's increasing a little bit more, but still not very much, right? And let's go to February 18th. Now we have 1,000, right? We have 900, we have 100. So that's really something beneficial, right? Is to pay attention to the volume and the open interest. You may want to make sure whatever you're trading has, some decent volume and some decent open interest, right? Now, I'm going to show you guys a debit spread now, but this is a put debit spread. Okay, so betting that the stock will go down, right? So for instance, what you could do is you could buy the 180 debit spread, so you buy the 180 put and sell the 160 put. Now the reason we're doing that is because the 180 has some decent volume, right, on the open interest. It's got 160, and then the 160 puts have 450. So there's much more 160 puts. It's also a lot cheaper, so you have to keep that in mind. Okay, it's about 1/3 of the cost, and there's about 3 times as many. So, the same amount of capital essentially is poured into the 180 puts as well as the 160 puts. All right. So I like that. Those seem kind of pretty fluid, right? So those right now would cost you about let's go if you buy one of these, sorry. All right. So if you bought one of these right now, it would cost you $216, and your max profit is going to be 1,785. Okay. So that is a very, very juicy play. And if Shopify drops, baby, it's going to drop. This head and shoulders pattern looks very, very nice. We could see a drop, something like this. Okay. Like, let's see here, right around our neckline. You know, this thing could go down all the way to 150, okay, because that's going to be your projected move for the head and shoulders. Basically, if you duplicate, from the head down to the neckline, and then you put that on the breakout, that's where it's going to take you. So that debit spread would be in the money, right? And if that happens in February, and we see this head and shoulders play out, and it ends up falling all the way down to 150. Now, I don't know for sure if it's going to fall down to 150. This could be, like a false pattern, right? But it looks pretty good to me. And this play is super, super juicy. Okay, that play I just showed you guys right here. $200, turn it into $1,800 almost. All right, that's like a 900% gain or something like that. 9 times your money, 9x. Big gains. Okay, so let me know what you guys thought of this video. Comment down below if you guys have any stocks or crypto you guys want me to analyze. And don't forget to join the Options Trading Tycoons Discord. Okay, if you use code Zachly, like the channel name ZachlyTrades, you'll get a discount on the membership. And come trade with us. We're making money if the market goes up. We're making money if the market goes down. Okay, and we're doing that trading options, buying calls and puts. All right. So yeah, thanks again for watching.